one analyst that we're going to talk to next still maintains his buy rating on Tesla, but says that the clock is striking midnight for Elon Musk because of many of those reasons that you just listed. So for more on that, we want to bring in Dan Ives of Wedbush Securities. Dan, it's great to see you here. So I was just going through a recent note that you put out this week. You're saying that the clock has struck midnight for Elon Musk, that Tesla is going through a major, quote, category 5 storm right now. Where do we go from here?
I think we're going to find out Tuesday, because this is probably the worst period that I've seen, I'd say in about 6 years for Tesla. And patience is wearing thin. And you see from an investor perspective, and obviously, many thrown in the towel, the long-term story is still there. And that's why we remain bullish. But no doubt, I mean, this is white knuckle. And there could be darker days ahead if Musk does not handle the call, I think, like an adult in the room, and actually give some sort of vision and navigation with a lot of questions remaining.
Dan, it's great to speak with you. Let's stick on this adult in the room concept, because a lot of the challenge here for Tesla is that the fundamentals don't always match up with what Elon Musk is purporting about deliveries and company fundamentals. I know that you do a lot of traveling to Asia to take a look at what's going on beneath the hood for some of these manufacturers. What can you tell us from your experience on the ground that may not be making headlines or may not be making its way out of Elon Musk's mouth to investors?
Look, right now, I can tell you firsthand, China EV market, it's like the video thriller, Nightmare on Elm Street. Pick your spot. It's been bad. Now, that's obviously been the huge headwind for Tesla, which is really, that's a key part of the growth, right, in terms of the China story. What I think investors need to hear is, what's the strategy to turn this around? Are they going to maintain prices? And the big thing is Model 2. You need Model 2 to have that growth story the next 18, 24, 36 months. This cannot just be about autonomy 5-6 years from now. And I think that's really the crucial point here that they need to get, and he needs to get on that conference call in terms of that point.
Dan, what are you hearing, or what are you expecting in terms of the timing of production of the Model 2? And if it doesn't happen according to plan, more specifically, what does that then downside risk look like?
If they don't do Model 2 and went straight to autonomy, that would be like being at a cliff in the Grand Canyon and looking down below. The point is, it's a scary proposition, because when Tesla talks about 2 growth waves, the second wave is Model 2, refresh Model 3, Model Y, and obviously some other models that they're going to introduce. But that's the issue right now. In terms of Model 2, you cannot go straight autonomy. Obviously, some have reported it. And this is really what I view when I say clock striking midnight. It comes down from Musk. Navigate the category 5 storm, just like he has in 18, 2020, and other. Otherwise, this is not just trust me, because I think that's really the frustration now, that essentially is, went from a Cinderella story, magic carpet ride, to what's been a bit of a horror show, especially the last 3-4 months.
Well, analysts are, and we're hearing from sources that the future of Tesla does really rely on cracking that driverless autonomy that you did mention. How likely is that?
Look, autonomy is going to be key, but we're not really going to see driverless, no steering wheels, 2030. And think about the regulatory involved here. So that sounds great on a PowerPoint and sci-fi in terms of what autonomy, and we do believe in the autonomous vision. But in the near term, it's about growth. What does free cash flow look like? How do you reverse the growth trend? How do you get to 3, 4, 5 million units? The only way you get there is with a sub 30K car, Model 2. For a product line that really hasn't had a refresh since Model Y, Cybertruck continues to be limited. That's not going to be mass market. And that's the issue here. This should almost be the equivalent of Apple being like, okay, iPhone 14, you're like, iPhone 15, iPhone 16. Hey, just wait till the iPhone 24. Stay tuned.
That probably wouldn't work out too well for Apple stock.
No.
Dan,
But that's also the difference between a tactician, a Hall of Famer like Cook, versus what we're seeing with Musk, which has really been like a comedy show, a bad comedy show, the last few conference calls.
So Dan, let's talk about what you think is more realistic then when it comes to delivery numbers, when it comes to gross margin numbers. What do you think is more realistic of what we're going to see from Tesla then in the coming quarters?
The comment didn't give guidance, right? So it's give what margins could look like. There'll be a lot of charges. Where does gross margins level out at? What's a realistic delivery number? Is it 1.95? Is it 2 million? What does growth look like? Like, give the 2 to 3 year targets in terms of, and that could be an analyst day, and then also they have to have the AI day in terms of where also Musk needs to recommit to keeping the AI initiatives at Tesla. Remember that, that threat, which obviously has ruffled a lot of feather, and that's a huge issue. Right. So we could talk about the proxy and the Delaware and moving to Texas, but there's a lot of issues right now that are uncertain. And that's why investors, and I hear it all day long, investors are just like too much risk with no pilot on the plane. And they don't want to see Ted Stryker as the pilot.
So Dan, super quick here. You sound pretty pessimistic. You're still a buy on the stock. What would it take to change your rating?
Look, next week, they need to basically reaffirm the Model 2, reaffirm the low-cost vehicle, give a strategy in the next 6, 9, 12 months. This can't just be a trust me, autonomy, we'll be back to you in 2030. And that's why you're seeing many throw in the towel, because of the fears and a lot of the reporting that surrounds that, along with the cost cuts that were definitely, I'd say a little gut-wrenching relative to a company that should, in theory, be in growth mode.
All right, Dan, thanks as always for joining us and giving us the Mets stuff in the background as always. We appreciate it. Thank you so much. Dan Ives is with Wedbush.